Good morning. I'm with Tim Termundi, the new chairman of Trident Resources Corp. The symbol is ROCK on the TSX venture. Tim, it's great to talk to you today.
Good to be here, Robert. It's always a pleasure.
Yeah, so teach us about Trident, Tim, because this is one that I got your email during the summer. I looked at it, I said, that looks interesting. But man, this has been a busy last 6 months. So it's easy to look through the cracks, but I couldn't ignore the chart and the share price and Bob Moriarty writing about how great this is. So tell us about Trident. Tell us about the inception story and how this came about.
Well, it's actually really an interesting story, and one of those overnight successes that only took 30 years to do. It really started with Ron Nedlitsky, and Ron has been the push behind this company for years. He's a member of the Canadian Mining Hall of Fame. He's found many deposits, including SK Creek #1, the Snip, Hammond Reef in Ontario, Guacamayo in Argentina. He's got a pedigree of mine finding. He's a mine finder, and he has always been interested in this Ronge Gold Belt. He was working there in the early part of his career in the 70s and 80s. And incidentally, I as a young buck, as an 18-year-old, before I had my geology degree, I worked for Ron soil sampling in this same Ronge Gold Belt. So my history with Ron and with this project really goes back about 45 years. And so Ron had, through Mass Gold, Ron was a founder of Mass Gold, and Mass Gold had slowly started acquiring land in the Ronge Gold Belt, probably 20 years ago, where some of it started. And he was getting up some pretty good momentum with Mass, and he just found that with his age and other issues in his life, he was having a hard time keeping the ball rolling on this project. And I was a shareholder of Mass Gold from the early days, so I was, following what was going on. I was seeing them slowly building ounces up in this area, and so I'd always been pretty intrigued by it. But Mass sort of fell on hard times in the last bear market. It was trading a penny or so at one point, and Ron just couldn't keep up with it. And so he'd been sort of pushing me for a long time to do something with it. But as you know, I sort of had my plate full with Eagle Plains and then Eagle Royalties, so I wasn't able to really do much to help him out. But I also have an association with Jordan Trimble and John Weisblatt through Rockridge Resources, which was a partner of Eagle Plains. And a couple of years ago at a conference, having a beer with those guys, and I said, you know what, there's a really good asset out there. It's in Mass Gold. They were running Rockridge Resources at the time, and Rockridge again was sort of falling on hard times. And I suggested that they get a hold of Ron and see if they could put something together between Rockridge and Mass. And so they did start talking, and decided that maybe a merger was the way to go. And Ron, I'm not sure who came up with the idea, but Ron had another company called Eros Resources, and Eros was basically a holding company, an investing company that started out as Boss Power in probably 20 years ago in British Columbia, and had a bit of money in the bank. So it was buying shares in other companies. And so the idea came up that there would be a three-way merger of Rockridge, Mass Gold, and Eros Resources. And so long story short, a year later of some major paper pushing, the info circ for this merger was actually 1,000 pages long. Never seen one like that, but it was a monster to get all this done. And so in short, Mass had the assets, which were projects in the Ronge Gold Belt. Eros had the money, in that they had some cash, and more importantly, they had a bunch of shares in Skeena Resources that they had bought over the years as Eros was financing or helping to finance Skeena when it was going back into SK Creek. And Rockridge Resources had the management, which was Jordan Trimble and John Weisblatt, who, young, aggressive, really savvy, smart guys. And so almost a year later, the merger finally came together. At one time pre-merger, those three companies, collective share price was under a nickel. So they were all sort of drifting. I kind of joke that it was like strapping lifeboats together to put those three companies together. But the sum was worth a lot more than the whole of the parts when all that came together. Coupled with the bull market in gold, coupled with the good fortune that Skeena had. It's trading up in the high $30 range right now. So the shares that Eros had are all of a sudden worth a lot of money. So the merger was done. The rollback was completed. It was a 10-to-1 rollback. The Skeena shares took off. We once the merger was completed, started acquiring a lot more ground in the Ronge Gold Belt. We've now got 120,000 hectares and counting up there. So we've got a very, very solid land package. And collectively, we have five distinct deposits that have, we just put out a new MRE here recently, about 900,000 ounces indicated and about 1.1 million inferred. And it's really important to note too that none of those ounces include Contact Lake. We decided to drill Contact Lake as the first project to drill because of its history. Again, a lot of these things go way back. Contact Lake was originally put into production in the 90s by Cameco, when Cameco was dabbling in gold. And at the time that they started production, gold was trading sub $300 an ounce. And so they did put it into production. It did kind of break even for a couple of years. And then Cameco management decided they were getting out of the gold business and they wanted to focus on uranium. So they shut the mine down in 1998. When they started mining in 1996, I believe, they had roughly 600,000 ounces. These aren't NI 43-101 ounces. These are internal Cameco ounces. We've read this in closure reports from Cameco, but they had roughly 640,000 ounces with limited exploration. They'd only explored, the footprint of the mine essentially. So after production, they went in there and mined 192,000 ounces over 3 years at sub $300 an ounce gold prices, and decided to shut the mine down in 98. So we spoke with just about everybody we could find that ever worked at that mine or ever had anything to do with it. And they all said the culture of the mine was, let's get this thing wrapped up and go home. The mine manager actually retired as the mine was closing, like the last week of operation. He went in his retirement. So all the guys that worked there said they were not encouraged to find more. It was, let's get out of here, shut it down. It's kind of losing money or breaking even. So it shut down, and it sat in limbo for years with the Saskatchewan government with a reclamation bond in place. And one of Mass Gold's last big moves in, I think, 2021 was to acquire the Contact Lake property from the Saskatchewan government, which they were successful in doing. Jim Engdahl managed to spend a lot of time in discussions with the government and got the asset into Mass Gold. And then from there, Mass Gold went kind of dormant. So we looked at, once the merger was completed, we looked at all the data for all the deposits. There's 5 deposits: Contact Lake, Greywacky, North Lake, Preview Lake, and Contact Lake finally. And we decided to look at Contact Lake. We liked the grades there the most. Contact Lake was, of the 5, the only one that is an obvious underground operation due to its grade. The other deposits are fairly obvious open pit operations due to their grade, but substantial in themselves. Like North Lake is about 1 million ounces itself, but at lower grades, open pittable grades. Anyway, we did our first drill program. The maiden drill program was 5,000 meters. We started last fall. We immediately started seeing what we were looking for. We thought, because with gold, any geologist will tell you they'll never give you a gold estimate. They'll just tell you it looks like it could run. And as we're drilling, hole after hole looked like it could run. And so management decided to expand that program. We went from 5,000 meters to, in the end, I think we drilled about 6,800 meters, added a bunch more holes. And the intention at Contact Lake was to not twin holes in the mine area, but to show that areas that weren't mined have ore in them, and more importantly, areas outside the mine footprint have gold in them. And the numbers we put out a couple days ago were numbers for mineralization outside, existing stopes, existing infrastructure there. And the next batch of holes are the very, very important ones to watch, because they were drilled well beneath the mine infrastructure. The lowest drift in the mine was about 340 meters. We were drilling down 650 meters. So stay tuned with that, because if we can show that mineralization extends well beyond the mine, which we fully expect we will see, I think it just opens that thing up big time. The drill program we just announced this morning is chasing the deposit on strike to the northeast. They did some drilling out over Contact Lake, over the lake itself, but never put that into production, because they started to put a production drift out underneath the lake, but the mine shut down before they did any stoping there. So we're comfortable that there is ore grade material under the lake. We're going to prove that up with the next round of drilling, and hopefully extend mineralization further along strike to the northeast. That's the plan on this next round of drilling.
Very good overview, Tim. Let me allow you to catch your breath for a second there. So the Ronge Gold Belt of Saskatchewan. So this is one of those interesting gold belts that I've heard about. I know the CB mine. I know you've had some experience in this region of Canada in the past, but it's interesting to me because it's not one of the prominent gold camps in Canada. It's kind of like a backwater gold camp, if I may say. I mean, that's my experience, at least. Why is it sort of a backwater gold camp that doesn't have as many mines as some of the other big camps in Canada?
Real simple answer: politics. For years and years, Saskatchewan was governed by left-leaning socialist government parties there. They did not at all encourage investment in Saskatchewan. And I have a chart somewhere. I don't have it with me right now, but for the last 80 years, I think about 50 of those years were NDP governments or left-leaning, socially oriented governments. In fact, when I was a young guy working up there in the 80s, SMDC, the Saskatchewan Mining and Development Company, had to have a piece of every project, and that was the government mining company. So it was kind of like working in Russia, and a lot of companies just were not interested in playing that game. And so they would be drilling in the Abitibi Belt or drilling in Timmins or, in the Cadillac Break in Quebec. Money was not getting spent in Saskatchewan. And that's very simple reason why not. The geology is excellent. We're working in a greenstone belt right now that probably, and I'm just throwing this off the top of my head, probably has 1/100th of the holes of the Eastern Greenstone Belt. And so it's an area that certainly is very underexplored. The Saskatchewan government now, under Scott Moe, is incredibly supportive. They are bending over backwards to encourage exploration, aid in exploration. The Saskatchewan government database is excellent. They put money into it. They have smart people running it. The Saskatchewan Mining Association, which is the advocacy group for mining, is very aggressive, very supportive, very in touch with government. It's a breath of fresh air to work in Saskatchewan, and that's the long and short of it. That's the reason.
It's very interesting to hear that backstory on the province, because now I view it as probably a top 10, jurisdiction across the globe. And it's interesting that Cameco was into gold in the 90s and then got out of it because they couldn't handle. I mean, I guess, what you say about the politics definitely does not encourage them to stay in operation there in 1998, but the gold price obviously was not a tailwind either. I mean, even in $1998, $275 an ounce, or was not a very healthy gold price environment. The fact they were able to break even at 275 is a testament to the high grade of the ore body. So why did you decide to become chairman? Because I remember a number of months ago you said, I'm retired. Well, now you're not retired.
Not too good at sitting still, I guess. The long and short of it is I didn't have the bandwidth a while ago to spend a ton of time on it. I was able to introduce a lot of people because of the connections I had, but I was still very focused on Eagle Plains, and particularly the last 2.5 years on Eagle Royalties. As you know, we did the merger the RTO with Summit Royalties, and for the last year I was buried in paperwork working on that. But I was on the phone a lot with Ron and with Ron's associates and with Jordan and with John Weisblatt and helping keep this ball rolling. Again, it was a very complicated transaction to get it all done, and I was sort of working in the background. But once Eagle Royalties was just finalized, the deal with Summit was just finalized in November, and I decided to poke my head up with this deal in January. So I had a couple of months. I actually spent 6 weeks in Palm Springs just hanging out and golfing and hiking and having a really good break from everything, and decided to come back as chair. I don't plan to spend all my time working day to day on this stuff, but I do want to get in on the ride. And I talk to Ron on a fairly regular basis. He's in an old folks home right now in Victoria, but he is very savvy. He knows what's going on. He's reading the news releases, and he just loves talking about this. You just see him light right up when we start talking geology and start talking about gold in Saskatchewan. He loves it.
Very cool. So Contact Lake, this was an underground mine, is that correct?
Yeah.
But
and that's the plan going forward, is to explore it as an underground mine. It will never be an open pit mine, I don't think. So explore it as an underground mine, chase the mineralization as far as we can, find the limits of it. So far, we don't think we found the limits of it. So with the grades that are there, I'm very confident that there will be a lot of ounces to our global resource coming out of Contact Lake. But there's also, with the land package we picked up and the lack of drilling that this whole area has seen over the years, there's dozens of showings that are 5 to 15 to 20 gram per ton all through this belt that we've acquired that have never had a drill on them. So part of our exploration this summer, while we're drilling ounces and drilling resources, is going to be to evaluate many of these other showings, that any one of those could turn into another Contact Lake. It's just like we're basically exploring in a hinterland that's had very, very little exploration, but with the infrastructure that's been developed over the years, we're right beside a highway, right beside a power line. We've got infrastructure in spades. Ronge, the center in Ronge is 20-30 kilometers from where we're drilling. There's a fantastic base there's hotels, there's restaurants, there's an airport there. It's a dream exploration project. And frankly, you asked me why I came out of retirement. That's one of the reasons, is I don't think you see many of these opportunities in your life, and kind of, why not?
Yeah, I mean, the more I look at it, Tim, the more I get it, that this is what got you out of retirement, because this is that good. Yeah, so you had Cameco mining this ore body, 190,000 ounces at over 6 grams per ton between 95 and 98. That's pretty impressive grade. And it's not even that small of an operation. I mean, I get it. It may not move the needle for a major mining company, but I have a feeling you could probably do a little better than that if you actually really focused on this thing and invested in it. Yeah. So tell me about the key infrastructure. What's there at site, and what would you have to build, I guess, to get this back into operation?
Well, Ron's initial concept for putting this together, and the reason he targeted projects that had resources on them, like a couple of the properties that are now part of the Trident package, were purchased from other companies, or he purchased the other companies outright. Like Comstock Resources had the Preview Lake deposit, so he mass acquired Comstock, or acquired the deposit anyway for shares in mass. Ron's initial vision was a hub and spoke central mill, trucking to a central mill. And, over the last 10 years, when he was, pitching this deal to people, they said, hub and spoke at these gold prices, I don't know if that would ever work. But they, again, didn't really have they didn't have Contact Lake at that time either. They only got Contact Lake in 2021. So this thing's pretty fresh. And so, I'm pretty sure that we will be able to sort of dust off this hub and spoke concept. One of our advisors on the board is Scott Broughton. He's a mining engineer. We asked him to be on the advisory board so that we could get advice from him in this regard. Like, none of us are mining engineers. I'm a geologist. Jordan and John are finance guys and market guys. So having an engineer looking over our shoulder is going to be very useful to sort of put all this together. We are not going to fall into the trap of being explorers that think they can be miners. We've sort of made that quite clear to ourselves early on. We are going to build ounces as quickly as we can, and as cheaply as we can, and as efficiently as we can, and package this company up so that a bigger mining operator can come in and grab the reins. I guess I should point out too that one of the really important things that came along, and again, part of the fortuitousness of this whole concept, was we were able to hire Paul Kramer recently in the last couple of months. If you've seen the news releases, Paul was the exploration geologist for SSR Mining at CB and Santoy, and Paul knows CB and Santoy inside out. Literally, he's been underground doing exploration and on surface doing exploration. So Paul is going to be a key part of our team exploring this whole belt, and he's very excited about the opportunity. We were very excited to, the timing that he was free as a free agent here only in the last few months. So he actually called me and said, I see what you guys are doing in the area. Do you think there might be room? And we said, hell yeah, for sure. And so now he's working with us on this. So I'm very confident with his exploration savvy. Again, Ron is contributing. Ron's got a lot of ideas too that we're listening to and we're going to try out. And I just think the future looks pretty rosy for this company. And it's great with the rollback that we completed. There was a lot of pain for everybody, including myself. I was a shareholder of all three of those companies, of Mass, of Eros, and Rockridge, and I was basically so far underwater I never thought I'd see air again. But with the merger completed, we've only got 32 million shares out, and with the Skeena shares taking off, we've got about $12 million in working capital with only 32 million shares out. So this opportunity doesn't come along very, very often, to have everything lining up like this.
Yeah, the share structure is something I want to talk about, Tim, because that really stood out to me from the get-go. Only 32.6 million shares out. There's a slug of 6 million warrants and some options out there as well. But overall, a very tight share structure. Tell me about some of the largest shareholders of Trident, and yeah.
Well, the largest shareholder is Ron still. Ron's, I believe, 12 or 13%. So those shares are tucked away. Jordan and John have, none of us have huge positions, because our positions basically came from the pre-merger companies. And then those positions, after going down to a penny or two, they got rolled back on top of that. So none of us as directors have huge share positions. We haven't, none of us got sweetheart founding shares. The only shares we have right now are shares we bought, mostly pre-merger, but post-merger and post-rollback, there was a 50-cent financing. And we all contributed, we all put in checks for that financing. So as far as you know, central pockets of shares, Ron is the only one that's got a sizable position. You know, all three of those companies were anywhere from 10 to 25 years old. And so, you know, it had a fairly widespread shareholder base, and that's still the case right now.
So the share price today is above $3 per share. So the market cap is getting up to there about 100 million in Canada. That's impressive for being so early on, but it also aligns with the drill results you guys have put out. I mean, like 43 meters of 7 grams gold and a couple of other very nice ones as well. It's unusual to see a junior that's in the exploration stage with a $3 share price. And I think, you know, I think some investors might see that and say, oh, I can't buy it, it's too high. But, you know, I think if we go back to the old days, like the 80s and 90s, there were a lot of stocks that traded on the venture above 10 or even $20 a share when share structures weren't accustomed to getting so bloated. So what would you say to those investors who say, oh man, $3, I can't buy it, it's too high?
Okay, let me put on my promoter cap. This thing, and Maury already said it again this morning, this thing is absurdly cheap. Our market cap is under $100 million, but with 2 million ounces in the ground, indicated and inferred combined, and 32 million shares out, and $12 million in basically cash or working capital anyway, that easily accessible if we want to sell more Skeena shares. Our peers are trading at roughly $200,000 market cap. So I don't think you want to get too focused on the share price, but look a little further into the market capitalization. And that's where the numbers all of a sudden become very compelling, that we are awfully cheap compared to our peers. I think the biggest thing that we're battling, and people we're slowly fixing that, is people have never heard of us. People have never heard of the Ronge Gold Belt. People have never even thought about Saskatchewan. Saskatchewan's only had one gold mining operation ever. Well, no, in the last 30 years, and that's been the CV mine, and recently the Santoy mine. And both of those are run by SSR Mining. But prior to that, there were only very small mining operations going, you know, 50 to 100,000 ounce deposits that were mined sort of piecemeal over the years. Generally opened up and then shut down because it couldn't make money. And so, you know, with $4,600 gold, all bets are off right now. It's a whole new paradigm, and no one's been here before either. But to have the infrastructure, the management, the marketing capabilities now of the group we have, the technical capabilities with Cornell McDowell and Paul Kramer working with us, I think the future is pretty bright. And I wouldn't have poked my head up if I didn't see this as an opportunity of a lifetime.
Very good. So just to be clear, the cash and Skeena shares total about 12 million right now. So is the plan to use the Skeena shares to fund the exploration programs for the next year or so? For now, we're seeing the share price go to levels that are starting to make a little bit more sense now if the right financing opportunities came along. But our plan was to hold the line, use our money where we could until we got to a point where we were more comfortable that we weren't suffering dilution. I mean, right now, even at $3 a share, if we wanted to raise $10 million, there'd be very little, 3 million shares. It wouldn't really dent things too much. We'd still be under 40 million shares with a huge treasury. And we're sort of keeping that optionality. Let's put it like that. We're keeping the optionality of financing or not. Yeah. And so in the Ronge Gold Belt, what does it cost to do core drilling? We are spending and budgeting about $400 a meter right now, all in. Okay. That's pretty average for a road accessible drill program. I know as you get further out, like with Taiga, when we were drilling south of the CV mine, we were looking at $600
plus a meter because we had to use aircraft to fly stuff in. We had to build camps. We don't need to do any of that on this project. There's motels nearby where the crews stay. There's restaurants nearby, so that cuts the cost quite a bit. So as we get ramped up in our drilling, like we're going to have 2 drills turning on this program we're doing right now by next week. As you have more footage happening, your footage prices go way down. And so, you know, if we get to the point where we have 3 or 4 drills someday, which I wouldn't rule that out, the cost will come down considerably from there too.
Okay, so at Contact Lake, with the 2 core drills that'll be there 1 week from now, is the plan to continue to step out along strike or to test a bit further?
We are drilling off ice right now. We're going to be off ice. The first couple holes are following up on hole 3, because hole 3 was a you know, a new discovery for us, because the mineralization that we hit, the rich interval there, was actually below the area they mined. It was in the footwall of the mine works itself. So that was a bit of a surprise to us, and a bit of a surprise that it hadn't been part of the initial mining operation. So we'll be following up on that. And moving to the northeast, we come to the Contact Lake, the actual lake itself, the lake shore, you know, right away. So in the last drill program, we were constrained by the lake shore there. So now we've waited basically for the ice to get thick enough that we can put drills on the ice. So we're going to drill out. The target is called the Bacchus 3 zone. It was actually discovered by Cameco, but wasn't mined. Like I said, they put an exploration drift out to it, or a production drift out to it to start mining it, but the mine shut down before they were able to produce from there. So we're very confident it's there. We need to drill holes to confirm mineralization, because Cameco, as I call it, a big company back then, they did not. They weren't trying to impress the market. They weren't trying to, you know, get funding from public sources. So their internal reporting, when they put together all their reports with their ore calculations, they didn't put any assay certificates in their reports. And like nowadays, you do that. If you're handing a bunch of drill holes to a resource modeler, they need to see the certificates. We handed the old Cameco reports, and they said, no, we can't sign off on that, because we haven't seen certificates. So a few of the holes we're drilling are going to be holes that are in the area of known mineralization, but we need to prove to a resource modeler that we can deliver the grades that Cameco had in their own internal reports. And that will sort of bless those numbers so that we can start publicizing the resources at Contact Lake.
Very good.
It's important to note that all the you know, the 2.1 million ounces indicated and inferred don't include any ounces from Contact Lake.
I see.
So
to be clear, the whole 3 that had the best, you know, highest grade interval over 40 plus meters, the holes that you're about to drill next are testing the highest grade portion of that hole at depth.
Both. We're testing it down dip a little bit and also up dip a little bit, because it hadn't been drilled to surface. It might even go to surface, but it's probably under soil or maybe under lake. I don't know. But we're testing the size of it, and then we're going out onto the ice to the northeast. We're basically taking everything to the northeast on this next drill program. And one of the reasons we have 2 drills is so that we can get on and off the ice by the end of March or early April, when you have to stop drilling on ice. We want to make sure we have enough firepower with the drills to get all the holes that we want to drill, that we can put those into a resource model.
Very good.
And further explore it to the northeast. It was never closed off, so we know it keeps going. We just don't know how far it keeps going.
You know, for Junior to have over 100,000 hectares is a very big land position. And whenever I see a junior with something like this, I say, how do you explore that area? So can you give us some idea of what the plan is here over the next few years?
Well, in my opinion too, and we haven't settled on a formal plan yet, but I want a little steak and a little sizzle. We're going to be drilling 4 ounces, kind of Sitka Banyan style. We're just going to be maxing out a couple of drills to expand the known resource areas. And at the same time we're doing that, we want to be checking a whole bunch of these other underexplored high-grade occurrences that we know exist. We know where they are. They've just never really been thoroughly tested. So we want to be sort of a 2-phase approach. The steak is building the ounces, and the sizzle is going to be what else can we find.
Tim, thank you so much for your time and the introduction to Trident.
All right, thank you, Robert. Always a pleasure. Maybe we'll see you in Vancouver.
Yep.
All right, take care.